And we're back at the whiteboard. I love these kind of videos because I feel like I really can show you guys visually what I'm talking about, right? And today we're going to be going over something that I think everybody needs to really nail in their trading, and it's how you start your trading day, right? We're going to go through a couple of things. We're going to be moving from here to the charts so you guys know exactly what I'm talking about. So hopefully you guys can see. I'm going to try to make it bigger, but first things first, before you do anything else, check the news, okay? The reason being is because I told you in the last video, it is the driving force in the market, okay? What does that mean? Price injects liquidity. Without liquidity, the market will not move. Price is either gonna look for liquidity or generate liquidity, and you always have to remember that. So this is what we want. We want to make sure we are trading on a day where there's news. If you're not, that's perfectly fine. I don't only trade news days, but those days are higher probable trades. Those are the days where you have a higher chance of winning with your setup. So again, make sure for checking the news. Those days, the trades are gonna be much more higher probable. So this is where we're gonna get into the meat of it, right? This is where we're going to actually, know where the market's gonna go. This is probably the most important one right here, right? And it's going to be creating our bias, right? We're gonna create a bias towards where we think price is gonna go. It's either gonna go one or two ways, right? We're either gonna go up or we're gonna go down, right? And there's a couple of key things that I wanna share with you guys that can help you guys do this. Without this step, if you can't nail this step, you shouldn't even be looking to trade in the trading week, in the trading day. If you can't nail your bias, you don't know where you're gonna go, so you shouldn't be placing a trade. So this is going to be the meat and bones of where you're going to be going with your trade. So what do I mean by that? When you look at the weekly time frame and you're looking at the daily time frame, this is where you should establish your bias, right? Where is price going to go? You're going to be looking at the daily and weekly profile, right? Once you look at these in order, weekly to daily, if you can't nail it on the weekly, we're going to go over to the daily. Once you have your bias on these time frames, you're set to go enter into your trade on lower time frames, right? But setting up your trading day starts with the news and then moves over to here, which is the meat of it, right? We're going to be using the weekly time frame and the daily time frame, and I'm going to be telling you guys what we should be looking for within these time frames. So you need to ask yourself three things, right? When you're looking at the weekly and when you're looking at the daily, right? Ask yourself three things. Where is our DOL, which is our draw on liquidity? This right here is basically saying, where is there liquidity that price is going to reach to? So if price is right here, right, and we have multiple confluences up here, right, fair value gap, we have previous daily highs, right, and prices down here, our draw on liquidity is going to be up here. All right, so that means we're going to want to trade in the direction of that draw on liquidity. That is one of the most important things in here, right? If price isn't reaching for the draw on liquidity, it's generating liquidity. So let's say, and I'm going to be showing you guys examples. So let's say price is here, and down here we have a previous daily low. We also have last week's low, right? We can expect price to push into this level, generate the liquidity, and then where's price gonna go after generates liquidity? The other way, and then we're gonna go bullish, right? So these are two examples on liquidity and what price likes to do. It's either gonna reach for liquidity, generate liquidity, and the last thing is reach equilibrium. So the equilibrium point, I'm gonna show you guys on the charts, probably a little easier. But if you have the market creating a swing move just like this, right? You have your high and your low. And let's say we're coming into the day here. You're gonna take the Fibonacci tool, which I will show you on the charts. You're gonna take the Fibonacci tool and you're going to find that 0.50, otherwise the equilibrium point. So when you're down here and you have this swing move, right? You can see that we broke structure. You can see that we're not going with a downtrend. But sometimes that's not enough, right? The bias isn't enough. You want to know, now where do I get in? When you see the equilibrium point, you want price to pull back to at least this level. So there shouldn't be any trades taken down here. There shouldn't be any trades taken down here. this is the equilibrium level. Price wants to balance out the equilibrium. And up in here, or a little bit above, you're gonna find possibly the draw on liquidity. Those are your confluences. So when you have a downtrend and you have a clear swing low with the equilibrium point, so we're gonna call this the EQ, right? You want to look for confluences within this level or above, right? So this is where then we see and we look for the draw on liquidity. So the equilibrium points up here, price wants to balance out that imbalance, the void, right? And then we might find a fair value gap, and we might find previous daily high. So this is our draw on liquidity, this is our equilibrium. Again, what do? We trade to the draw on liquidity. So if we're down here, we're gonna possibly look for a trade to push price up in here. And then up in here is a whole different setup, because now you generated that liquidity, price can push right back down. And this is really when you can really take advantage of the markets. So after understanding this, then we're gonna move on to the lower time frames for entry. All right, so now we're gonna move over onto the charts. I'm gonna show you guys how I'm going to find our draw on liquidity, how we're gonna go into there, and how we're gonna then execute on the lower time frames. Remember, daily and weekly profile, key.
So we're on the charts now, and I'm going to be showing you exactly what I was talking about, right? How to start your trading day. And this is actually going to be a real trade that we call on 4/15 with a net P&L of $500. And you guys are going to see right here. This is going to be, 12 Friday, but you're going to see on the lower time frame this was the 15th. So regardless, we're going to start off by showing you, how I go about my trading week, right? What am I looking for? And again, I'm looking for the weekly and the daily profile to tell me where we're going to go. But this is a perfect example, because sometimes you're not going to be able to know where it's going to go. Sometimes it's going to be choppy, just like this. And what do? You move on, right? You move on, and we're going to go to the 4 hour, right? We're just going to apply it to the time frames. This was a scenario where it was just simply hard to really know where we're going to go, right? And I'm going to give you another scenario where the daily time frame does tell me where we can possibly go. So if I'm looking at the weekly time frame, we are holding, we're holding in this range right here. Okay, we're holding in this range, and it's not really telling me anything, right? It's just basically telling me that we're just ranging. I don't have a clear bias, right? So when I go ahead and see that, I'm going to go down to the lower time frame. And the daily time frame also is doing the same thing, right? The daily time frame is not showing me much. The daily time frame has been in this nasty range over here, right? So, and if you look at the previous daily candles, there is no, all these candles that are being formed are neutral, high momentum. Like, we're getting high momentum from both sides, right? High momentum bearish is the black one, high momentum bullish the next day. We just don't know where we're going to go. The market is being indecisive right now. So what I'm going to be looking for is I'm going to be looking at the lower time frame, the H4. And if I can't find anything on the H4, I'm not going to trade. But we ended up finding some great confluences on the H4, right? And you can see right here that it's actually more clear. You can actually see the market. You can see the market move, right? The market's moving clearly. When you looked at the higher time frames, it was just consolidating. It was just an ugly range. Now, what made me go short, right? I'm going to show you how I built a short confluence, right? Because we ended up shorting, now that you guys know, right? So I'm going to show you guys, right? And I'm going to show you guys how I came across this, okay? First things first, right? Where's price at? Price is at this high right here, right? We created this high, and coming into session, price swung down here, right? So when I see something like this immediately, I'm going to take the Fibonacci or the Gann tool, right? And I'm going to mark off our equilibrium level, right? Because the equilibrium level, is going to be the level where price wants to balance out, right? When I see a swing like that, that's immediately what I think of, okay? It's just like this. Swing from here, equilibrium level was in here. It was a little choppy, but you can see price never broke above that level, and then price dropped, right, down to here, okay? Same exact concept right here. So coming into this trading session, right, how I took this trade, same thing. I see these swings, I see the equilibrium level, right? So if price is going to short or long, I know price is most likely going to reach this level regardless, okay? Now, where is our draw on liquidity, right? That's the next thing we want to find. Our draw on liquidity for me, right? Since we have a swing low, right? I'm gonna already have in my head, okay, we had this big drop. Can we go shorter? Why would we go shorter? And I start to look for clues. And we have sell side liquidity down here, okay? We have this sell side liquidity down here, where price over here never swept, okay? That's very important. And then price over here again, price is low, it was never swept. So when we have this big move, I can already assume that our draw on liquidity is going to be down here, right? This is where we want to trade towards, right? So now that we have these two things, now we're going to start putting pieces together and find confluences to take this trade. So if our draw on liquidity is here, what did I say on the whiteboard? We want to trade towards that level, right? Now, in phase 1 that I teach in the academy, you're going to see that we're going to want some type of pullback, right? So if we're going to get a pullback, we're most likely going to pull back at least until this equilibrium level, right? To fill in all these voids. Now, what I do now is I simply look for confluences in here, right? And you're going to see that we have an H4 fair value gap in here, H4 FEG, okay? We also have another one all the way up here, H4 FEG. And any other confluences we find under this equilibrium, I'm not even going to bother to mark them. The reason being is because I don't have an interest in shorting underneath that equilibrium level. Because even if price taps into this equilibrium level and misses our fair value gap, right, it's not enough confluences, and price may go down a little bit just to come back up, stop us out, and then go through. You know what I'm saying? So again, we have our draw on liquidity. We want to trade that way, but we know that price has swung low. So we want price to balance out before going to our draw. So when you're going into a lower time frame, right, I'm looking at the equilibrium level, and I'm going to look for levels above this level. And I have one level right here. I have an H1 fair value gap, okay? So now you kind of have to play both sides here. My draw on liquidity is to the downside, and we want to trade that way, okay? We want to trade that way. So if price is pulling up into here, right? If price is pulling up into here, right? We want to take the trade in here to push to our draw on liquidity, okay? So let's wait until price reaches that level. So price has reached into its equilibrium level, and we've also reached into all our fair value gaps, okay? We literally tapped into the H1 fair value gap, and we tapped into our H4 fair value gap. So now, personally, I'm ready to take a trade, right? Our draw on liquidity is down here. We want to trade in that direction. We got what we wanted. Price balanced out the equilibrium. Price balanced out the fair value gaps, right? We tapped into fair value gaps. Now, again, we want to trade towards the draw on liquidity, okay? That's how we're building our buys. So now we're going to want to go to the lower time frames, right? And we want to find a market structure shift that's going to leave behind a glue, right? Boom, there it is. So you can see price is pushing up, price taps into this area, we get a strong reaction. Once I see that reaction, I know it's money. But the key thing here is that it creates a fair value gap. So it broke structure and left a clue behind, right? And this is this fair value gap. Okay, we're gonna mark this off, FVG M5, right? So I know price is gonna tap into here. And as price breaks back under, our position is gonna look something like this, and we're gonna target our draw on liquidity, right? We're gonna go under the 15-minute time frame, and we're gonna see what happens. And just like that, price smacks. And actually, our draw on liquidity is down here. So what are we thinking? Are we gonna reach? And we do. And price melts. Literally beautiful textbook trade. And this is how you literally use the draw on liquidity equilibrium points to really know where you're gonna go. So to wrap this video up, I'm going to show you an example where the daily time frame really did help us know where we're going to go, right? So again, for those of you who are new, if you're not familiar and you guys want to learn this, again, it's all in the academy that I teach, right? Which you guys can contact me in the description. But in this scenario right here, we have a range, right? And we have generated buy side and sell side liquidity, right? So if we want price to push to a certain way, right, we want price to raid these liquidity levels, right? And in this scenario, going into this trading day specifically, right here, price may look like we're breaking under, but price is really just sweeping over the lows, right? Sweeping over the lows from over here, okay? So I know coming into this trading day that we're going to go long. This is where the daily does tell you where you're going to go based on liquidity, right? Remember what I said, there's liquidity at swing highs and lows, high, low, high. So when you're in the middle, you want price to raid, right? You want price to raid these lows right here to be able to go in that direction. So this is an example of generating liquidity, not going to the draw on liquidity, generating liquidity. Okay, again, when you're in this range, right? You don't have a clear bias, right? But there's generated liquidity on both ends of the range. So when price breaks under, right, when price breaks under here, we're generating liquidity, we're sweeping this low for a potential move to the upside right here, right? And when it comes to these setups right here, they're really, really nice and easy, because if you can identify that, simply you go down to the lower time frame and wait for price to shift structure and break back into that range, right? So let's see what I mean. Right here, price is seemingly starting to break above. We're starting to get our first clue of price breaking above. Once price breaks above, guess what? Price is going to fly. And that's literally what happens, okay? So this is where the daily time frame really does show us, okay, we're not trading to there is no draw on liquidity, but there's an area where we can generate liquidity, and it's at these highs and lows, these recessions, the session highs and lows, the weekly highs and lows, the daily highs and lows, right? In this scenario, it was a weekly low. Price came down here, we're in the range, generated liquidity, price breaks above, and it's over from there, right? So it's been a great time explaining it to you guys. I enjoyed teaching it. I hope you guys have a good week. Hope you have a good trading week. Let me know if you guys have any questions in the description. I answer to all comments. And again, reach out to me via email or Instagram if you guys want any help with anything. Deuces.